Wall Street is taking a pause these days as everyone is waiting for the key PCE number to come out on Thursday morning. Everybody wants to know what the Federal Reserve's favorite inflation gauge is going to say, and it's definitely going to move the needle for the markets. Welcome, everyone, to Buy, Hold, Sell. I am your trader, Todd Schoenberger, and I am joined by my friend and co-host, Tobin Smith, out in sunny and hot Scottsdale, Arizona.
It's warm. It's not hot. It's warm. It's beautiful. And it's dry.
I got to tell you, in New York, we went from a high of 60 down to 30 in about 20 seconds. It's crazy how fast it changed. But Jordan Kimmel is joining us today on Buy, Hold, Sell. He is the chief market strategist over at ValuEngine Capital. And Jordan, I got to start with you because everybody seems to be thinking that the PCE number is going to really make up what are we going to see more bulls running, bears coming back in? What are we going to see? Is everybody overplaying this right now?
All right. Well, first of all, let me say it's great to be with some great friends and great to be with the show. And I will tell you, everyone's watching for this number but me. And you know, the whole idea is that everyone is so focused on whether there are going to be 7 cuts, whether there are going to be 8 cuts or 9 interest rate cuts, and when are we going to get zero and free money again? And folks, you're not going to get free money again, probably as long as you invest. We were in an unusual cycle, and everyone's begging for lower interest rates and some sort of signal. And frankly, Todd, I think we're back to the old normal where you got 5% on bonds, you got 9 or 10% in the stock market, and if you have an edge, like I think I do, and you're looking to make 18% plus and compound at that level. And frankly, I have some big companies in my portfolio or magnet stocks in my portfolio set to announce earnings. And I'm frankly more interested in the earnings than the PPC, the PPI, or the PP anything.
The PP anything. Hey, Todd, here's what I do find is very interesting. First off, obviously, Jordan is right that on the people who were we're going to have 7 cuts in freaking 2024. Those people are out of a job. I mean, it was complete insanity. To Jordan's point, the average 10-year rate for the last millennia is about 4.2%. Okay, and we did pretty well. Okay, with that, particularly in the .com, we went up to 9%, right? So the obsession with that was nuts, and then those people got washed out of the business. Trust me, because you can't be that wrong for 11 months in a row. Then secondarily, what we're seeing, look at the 52-week high lists. Only 3% of them are tech stocks. I'm just looking at the list. The discretionary is up 7% this year. Industrials 6%, materials 5%. The
housing, retail.
Yeah,
the list goes on and on right now.
Yeah, Jordan, one day you can explain to me how Abercrombie Fitch looks like, NVIDIA on fire, but because obviously you shop there. I don't, but
hey, watch it now.
Yeah, I know, but the market is broadening out like a normal thing. People are taking ridiculous profits. When we have what's known as we've done put spreads on our NVIDIA, on our SMCI, on our AMD, et cetera, so that people aren't going to have a tax issue this year, but they're protected. Because at some point, the mechanics that made SMCI go from $115 while we bought it to $1,070 in 9 months is a once in a lifetime. It was like buying Cisco at $7 in 1995 or JDS Uniphase for $14.
JDSU.
You thought about that.
But let me tell you this, Tobin. What's interesting is that probably the biggest mousetrap that I've seen in the entire industry has been this obsession all of a sudden with the Magnificent Seven. And I saw somebody on one of the major networks saying, don't worry about it because the S&P concentration has been higher than this. For example, in 1999 and in 2007, and I'm like, dude, don't you realize that was exactly the trap? And so once somebody starts talking about the 4 horsemen or the Magnificent Seven or the BRICS, something really easy to distribute to retail. The trap is being set. And credit to you, Tobin, for putting on the put spreads, and credit to you for super micro, which we talked about for a long time on every show. At 100, 150, at 300, I was like, what's going on here? And admittedly, this last move up was a mousetrap.
Well, hold on now. Hold on. Are you saying what I think you're saying is that the Mag 7 stocks, that's a mousetrap for investors because everybody's concentrating on that?
It's already sprung, by the way. The trap's already sprung.
Oh, come on.
Todd, it's exactly what I'm saying. And the thing is, I'm not saying NVIDIA is not a great company, and I'm not saying that they don't dominate their space right now. The thing is that what I've talked about in my book, Magnet Investing, and PE, people look at it and say, well, the PE is 18 of the market, the PE is 20 of the market, so it's high. The PE is a distorted and age-old way to look at things. The way to really look at things, in my opinion, is price to sales, and price to sales inter-industry, within your industry. Right now, NVIDIA looks like or is priced to increase its revenues at triple digits for the next several years, which it won't, which it just won't. And the thing is, at any level of disappointment, you're going to be left holding the bag. So it's not that it's not a great company. It's not that certain cars aren't great cars. But if I try to sell you a really nice high-end car for $17 million, run. Right? There's got to be a price.
If it was filled with NVIDIA chips, I'd buy it from you, Jordan. Okay. Well, to Jordan's point, the FOMO thing for many investors, and people listening, but I know just based on my all access Discord room and trading room, there's like a grief pattern that we told them to buy SMCI. We told them again to buy us, and they didn't buy it. And they didn't understand the thesis that we had back in May and April of last year about SMCI. By the way, SMCI went on the IBD list like in November, I think, because you're more of a momentum guy. It was like November 23 or 22. So it was showing itself already. But I mean, I was at the conference where ChatGPT was introduced. I mean, online, of course. And when you saw the people walk out of there just stunned at what was going on, then, I'm in the business of transformative investing, transformational events that create an inflection of demand, and pricing power and margin power and everything. This was the most amazing, it was like heaven opened up and the angels came down in April. And we said, oh my gosh, it's JDS Uniphase, it's NVIDIA, it's Sun Microsystems all over again. Except
let me
they all make earnings.
Yeah. Let me add something to you. I was looking at a chart. I remember it was a couple weeks ago, and I'm looking at SMCI, and it was around $950 then, $950. And I'm asking myself, what investor, what logical money manager is buying the stock right now? And the answer is there was none. It's algo driven. Yes. And I've talked about this for a while. Right now, algos are running Wall Street. And the algo says if the moving day of 7 days is higher than the moving day of 10 days, buy it, and without any logical valuation. And so once you're caught up in an algo, it doesn't really matter, but you have to step back and step out of that vortex, because once that cyclone comes out, I have a little picture I generated from AI of people trying to squeeze through a narrow door. Yeah, and that's going to be ugly. There's going to be a stampede.
But the what you're suggesting, though, is that the algos are controlling the market movement, but they can't control earnings.
81% of the trades today were algorithmic trades, Todd.
Relax. But they can't control earnings. And you're seeing great earnings reports from these tech companies. It's hard to dispute the fact that these are the stocks that you want to be in. I mean, you don't necessarily want to be in a Colgate-Palmolive stock. You got to start thinking about the tech stocks, the Apples that are out there. That's going to be the wave of the future, and it already is. This is living history right now. It's hard to believe anything else, that you would even consider anything else at this point.
But remember the Jordan's talking about algorithmic trading by huge funds like Renaissance Fund and Stevie Cohen and all the guys, and they're buying in split seconds. And if the earnings per share hit the formula, hits the momentum, they buy, and then as soon as it's up, they sell, right? I mean, that's how they do it. And also, by the way, they call their friend just before they sell, so the other guy can short the stock. I mean,
right.
There's a underbelly of this that Jordan's talking about that makes perfectly good sense for the private investor, who are my customers for the most part. They're like, Toby, just help me understand the thesis. Get me on the wave, right? I used to be change wave investing until I sold that to S&P, right? And tell me when to get in and tell me when to get off. And I'm good with that. I'm good with not getting the next, $50 on SMCI, right?
Leaving that last 10% or 5% to somebody else, and that's okay. But let me give a point to you. So I have somebody very sophisticated, has a lot of money, had a lot of money with me, and the question was, why don't you own these 30 stocks? What she said is the stable NASDAQ 100, the stable. She showed me 30 of them. And so this was in the very beginning of this year. And what I did was I took those exact stocks, put it into a model and said, so this included NVIDIA, this is blah, 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 blah. And so what did they do in 2022? That same 30 stocks was down an average of 46% for the year. And people couldn't get rid of NVIDIA fast enough. They couldn't get rid of Meta fast enough. And so the point is, good companies and great earnings, are one thing. Once everybody's talking about the exact same thing, it's time to basically move over and find something that's a little bit less unexplored. But to your point, Todd, I don't want to sit in anything what's considered a great company that's going sideways for 10 or 20 years.
Right.
Things can happen. I need magnets about revenue growth, margin growth, and momentum, all three of them. And our institutions accumulate. There's all kinds of factors. So I'm not talking about being in great companies that have no, even like 3%, 4%. My screens cut those companies out. I'm in some pretty exciting companies that actually have momentum, but are not talked about every single day on every single chat room.
Yeah, over the weekend, I collected all the articles from Barron's, Wall Street Journal, Fortune, a couple other ones. The headline was NVIDIA. And there was over 28,000 words about NVIDIA on just those 5 chats. You know how I could do that? Generative AI. Thank you very much.
There you go.
So Jordan's right. I mean, again, let's not make this too complicated, but NVIDIA is going to, over the next 6 months, next 3 quarters, going to have much higher sales, much higher margins. And yes, competition at a point, whether it's Intel's GPU or whether it's other, Intel's or the one that Microsoft's making or so on and so forth. But if you look at the technology here, the GPUs are the only thing that works for sucking all that data into a large language model. It's the only one that works, right? But when it comes to the inference, and that's what's coming out this week, people are finally, understanding what the artificial intelligence is, what generative AI is. The inferential part of taking that data, and when I ask how many stocks are above the 50-day average and on lower volume, and I get an answer back in 5 seconds. That's not the GPU. That's the CPU. That's the Intel chip. That's the other ones. So I can get all the weeds you want in AI, but I will say this. There is no question that this is not a 3-month and a 6-month trend. This is a mega transformation that will change almost every business. Certainly your home. I mean, remember when I went to Siri today and said, "What's the address of my bank?" And it gave it back to me, and it said, "You want me to call it?" Well, no, but thank you very much. Could you imagine that 10 years ago?
No,
That's
it didn't.
incredible.
It
So,
didn't
so
exist.
Siri gave you the address to the Swiss bank because you have the Swiss bank
So
account.
which account? Which account?
Everybody's a freaking comedian now, Jordan. You know that?
Hey,
I mean, honest to God.
so Todd, let me just go over one other point to you. And look,
Okay.
I'm not saying that tech is not important. Tech is hugely important. It's obviously, in every industry, in every sector, and so on. But I want to remind you that when I first got in the business, I don't want to date myself, but I was selling muni bonds at 9%, the hottest tech stock.
Me
That's
too.
The
Toby.
hottest tech stock
Yeah.
was digital equipment.
Yes.
And digital
Tech.
equipment could not be stopped. And at 199, it got stopped and it went to zero. Okay. And let me give you the most powerful example I could ever remember. People were saying there's going to be this internet, it's going to expand. The internet is going to expand and everything's going to go. They didn't even have a word called the cloud yet. But the server market was dominated by Sun Microsystems. I mean, dominated 90 odd percent. And so the one thing you know for sure is that Sun Microsystem was the genes of the business, the mining, whatever. Sun Microsystems was $80 a share in 2000 roughly. It went to $1 a share. It was sold to Alcatel at $2 a share. And guess what? The internet got bigger and the cloud developed, and the company with a 90% market share was the ultimate short. So
Yeah.
names change. What do you got, Toby?
Jordan, this has 650 gigabytes of memory. The first Sun server I purchased for investorplace.com, which I founded, thank you very much, was $2.5 million for 50 gigabytes of storage. I mean, so Jordan's point is well taken. We're going through cycles. We're living in a competitive environment. Technology is the most competitive environment in the history times 10. There are thousands and thousands of people who are working on right now, as we talk, on the GPU that is cheaper and faster, more energy efficient. They're working on all sorts of aspects to go after NVIDIA. Right now, NVIDIA is sold out on their chips for the next 24 months. Now, some of those orders you could cancel, but the likelihood is not that they're going to cancel, number one. Number two, Jordan, I would say the other side of this is, one of the reasons why NVIDIA is so incredible as a company is that they invented the operating system for these GPUs, the CODA system. Most people think they're just a chip company. But what made them impossible to compete with is the people who code this stuff. They only know the CUDA system.
Right.
So they created a moat of software that then their hardware went into it. And number three, because we own Taiwan Semiconductor, they also don't make their chips. So they are a lean, mean freaking machine.
Fantastic company. It depends on what you pay for. Let me make one other point here. We've talked in the segment went on for maybe longer, Todd, than you planned. But one name did not come up, and this is just an interesting point. The name that did not come up is Apple. And I am not long Apple. Apple does not even make my model anymore. And I've told people a year ago, Apple's like Roger Federer. It was classic. It was beautiful. It led for 10 years. No one's talking about Roger Federer anymore. And I'm not saying Apple's
he retired, for crying out loud.
That's the whole point. That's the whole point.
Oh,
Things come and they go. And there was Nokia and there was Ericsson. And anyone that believes that Apple was going to go to a $10 trillion market cap. And I have one friend, a good guy who should be in an insane asylum, who was Apple only on full margin. And he's got a lot of, and he's going to end up in divorce and end up in all kinds of problems based on Apple. He's an Apple only on full margin. And all I'm saying is that I don't think in 3 years from now, every conversation is going to start with NVIDIA. And I'm not saying it's not a great company.
Yeah.
I'm saying, remember, you have to know what you're paying. And then when everybody is in NVIDIA, give it to him
Yeah,
and move
right.
on to something else.
Is your buddy, what do you think his blood pressure is about right now? I mean,
he's crazy. The guy is literally
Yeah.
crazy. And he told me what his net worth was last year. And I said, Jim, okay, you won. Sell half of it. Just at least get off a margin. No,
right.
no. I am on
I'll
full
have to
margin.
pay taxes. Jordan, I'll have to pay taxes. Let me tell you, my two biggest positions in 1999 were MicroStrategy at about $11 and went to $350.
Yeah.
And this little company called JDS Uniphase, right? And then I owned a company called Zoom, XOOM.com, which Bear Stearns, God bless Pocket Shops, took public. And I was able to get out of that with my $2 shares, at like $65, right?
Nice.
3.5 million, 4 million. I can't remember what it was. All I remember is I was so happy to pay that $1.5 million income tax bill.
Please.
Because Zoom went to zero. The other ones went to zero, went completely down. And come on.
Yeah. That's great. That's great. Listen, we got to close it out on that block. Definitely went longer than what we wanted. But coming up next, though, I do want to start. I want to continue with this inflation discussion because it is top of mind all week on Wall Street, but also with the financial media. And I do have a very special question for Jordan. So please stay with us after the break. We have with us today Jordan Kimmel. He's the Chief Market Strategist over at ValuEngine Capital. And we'll be right back after the break. All right.
Buy, hold, sell, brought to you by CrossCheck Management.
Ready to up your game and learn more about the thrilling world of sports betting? Introducing Double Down with Breslow, the ultimate podcast about the business of sports gambling. Join me, James Breslow, and a long list of expert guests as we dive into the art and science of the sports betting industry. Evolving regulations, technology enhancements, and the meteoric rise in the number of players makes this sector the fastest growing and most intriguing in the world. Unlock the business secrets from many of the industry's most recognizable C-suite executives, including famous odds makers and influencers. Every episode of Double Down with Breslow is packed with insider tips, deeply skilled analysis, and in-depth discussions. Don't miss out on the ultimate resource for mastering the business of sports betting. Listen to Double Down with Breslow on the Evergreen Podcast Network or wherever you listen to podcasts. That's Double Down with Breslow, the business of sports betting podcast.
Welcome back to Buy, Hold, Sell. Well, I am Todd Schoenberger, joined by my friend and co-host Tobin Smith, who is also host of the new Money Mavericks program. I know our guest today on Buy, Hold, Sell is likely going to be a guest on that show, and our guest is Jordan Kimmel. And Jordan, I know you turned down a you were going to have an exclusive interview with Fox Business. You told Fox Business, oh no, you gave them the Heisman because you knew the right place to be, and that's here at Buy, Hold, Sell. So I got to ask this question. Because as we all know, Fox likes to mix politics with finance. You're probably the perfect person to ask this question. The White House right now is now spreading a narrative. It just started this morning about 5 a.m. with Elizabeth Warren hitting the circuit, and now you're starting to hear a little rumblings coming out of the press conference inside the White House. But now they're pointing fingers at the Fed. They're saying inflation is high because of higher interest rates. Now, I have to ask you this question, and we all know that we're in the middle of a political season, but is any of this true? What do you think?
I think not. I think that here's what's the case. I mean, this goes back years ago. I was sitting on the couch in the green room. The most depressed human being in the whole world was sitting there and telling me why the world's going to end. And I actually, he looked for me. I said, by the way, I'm Jordan Kimmel. He said, John Stockman, and
right.
He was the original supply side guy, right? And what he said was, they try to make deals back with the Reagan administration where we will go ahead and cut taxes. You'll respond again by cutting spending. The deal never happened. They couldn't stop spending. And what the inflation is really all about, Todd, is that in record revenue in tax receipts last year from the government, they just happened to spend $2 trillion more. Giving money, trying to make it rain, trying to get election votes and so on. So what you have here is an inability to stop spending on the government, which is where the inflation's coming from. And the biggest problem is a year ago, or I should say 2 years ago, the actual expense to cover the debt was actually very manageable. It actually now has exploded to where you're seeing the debt coverage ratios exceeding the military spending, and they're begging to lower rates so they could keep spending. Okay, and so this is really the issue, and I don't know if they'll ever stop spending, and I just don't. I just wish in a way when the Europe was selling -2% bonds. And
yeah,
selling
baby. Why we
billions of
didn't do that? I will never forgive those jagoffs.
one step
Trump
further,
said that.
Tobin, taking all of our debt and refinancing it to
Yeah.
1% 100-year bonds. And there was a golden opportunity
Yeah.
that just we could have sold as many 100-year
Yeah.
bonds at 1% as we wanted. So to your answer, Todd, I have to say one other thing before Tobin will interrupt me, hopefully, is that I believe inflation numbers have been reported wrong since I was in diapers, and probably well before then. And in my book,
Okay, I can't get that
Method of
mental picture out of
Investing,
my head right now, Jordan. Okay, can we just keep going?
you remember Shadow Statistics, great
Yeah.
guy, Mike Williams. And the
Mike
thing
Williams.
is that when inflation was being reported at 1 and 2, he said the real number was around 6. And that was back then. And so inflation is never reported accurately. And the government does have their finger on the scale somehow. And yes, inflation is coming down a little bit lower. That doesn't mean prices are coming down. It means they're going up a little bit less. And there's a lot of the middle class and a lot of people spending way too much money, of their budget on groceries and gas. And that's not gonna disappear if prices keep going up, but by a little bit less.
Well,
We got a real inflation problem.
I won't argue his economic points because most of them there are malarkey. But there's a way to play this, and we have a portfolio that we call the lower 50% household, and the lower 50% household in that portfolio has been big lots. 3 or 4 other discount. Those stocks are all up 70% for us. Even
Wait, which
Costco.
company? What was the theme? I didn't get the
big
theme.
lots, and then there's
Okay,
Ollie's,
got it.
OLLIS, Ollie's, and these are discount and dollar store.
Right.
There is no question you are correct, because remember the other side of this is that other than in California where you get $20 an hour for flipping a burger. Wages haven't gone up nearly as much as prices have gone up for the 50% lower. Remember, 20% of the households in the United States are responsible for 78% of the spending and own about 90% of the wealth. The bottom 50% of households own 5% of the wealth in the United States. So there's no question this bifurcation is very real. And you could argue a lot of different points on inflation, but we had a pandemic. We flooded the market. You're a monetarist, sounds like. You get all that monetary stimulus. It's going to go someplace. It's going to have more demand than supply. That's going to raise prices. Then we had, of course, the container ships went from $2,000 to $125,000 for a 40-foot. All that stuff, to me, is, what we say in economics is that was outlier events. Those weren't natural events. And then having, negative cash, having cash that had negative return after inflation, never happened. Certainly when in a decent economy. So there's a lot of that happened, and it's very hard for people at home. It's very hard for people who are professional economists to put together a formula now in a post pandemic, post war, or during a war. The United States is the largest exporter of oil and natural gas in the world. 20 years ago, we were the largest importer. 10 years ago, we were the largest importer. So there are so many differences between today and 5 years ago, 10 years ago, 20 years ago, 30 years ago, that I will go with your basic assumption was that what makes a stock rise in value is rising earnings per share, rising cash flow, and some type of moat, protection against competition that allows them to have these higher margins. End of story. And I I look for inflections. In other words, dramatic changes upward in demand, in pricing power, and that's where we put our money. But that
Why they called you the change wave king.
You got it. Well, that portfolio of stocks for the lowest 50% household, which spends 88% of their income on shelter costs, which is the number one inflation issue, and food. So, that's a whole other discussion. But in terms of, are they going to keep going to their local Safeway? Or are they going to go to Ollie's or Big Lots or the other ones where they're getting, they more bang for their buck? They're not shopping at my Sprouts down the street. Okay.
There you go. There you go. So, Jordan, I have to ask, I think the White House, and I'm going to speak like a conspiracy theorist here. I think they know what the PCE numbers, they already know what it's going to be. We're looking at a core rate of 2.8% year over year. The overall rate's supposed to drop to 2.4% from 2.6%. But either way you look at it, any way you want, maybe it's going to be higher. Who cares? I think the White House is going to try to pressure the Fed to start cutting rates sooner than later. With all of this said, does the Fed need to cut rates at this point?
I don't think they need to cut rates unless they're just going to try to help out the administration in terms of their budget deficit. And the fact is that if they lower rates 3/4 of a point tomorrow, to Tobin's point, are the major credit card companies going to take their interest rates from 22% to 11 or anything to help the public? Does this really matter to the general public? It really doesn't. And so to
stocks, though, to traders and investors, it would mean a lot.
It might mean a lot. And so people will have their finger on that. But you know what, Todd? We have enough experience that the drum roll, the most anticipated number, as soon as that number goes past, you have the next most anticipated number and the most anticipated number. So I think that he did it tongue in cheek. But Warren Buffett used to say, if you spend 59 minutes out of if you took an hour to really think about the economy per year, you wasted 59 minutes. Yeah. And the secret is trying to identify what Tobin just said and what my whole background has been, which companies intra-industry have the highest margins, have the highest revenues, have the highest revenue growth, and those show up on my model. And what I'm interested in is the bell curve, the tips. I want to go short the bad companies, lower margins, decreasing margins, insider selling, too much debt. I want to be long the stocks with very little debt and pay cash flow. So I actually have trained myself to try to tune out a little bit of the Fed talk. And the major networks would have me on Fed Day. And would go, what do you think, Jordan? And I'd say, I don't really care. And they said, we got to have this guy on non-Fed days because he's blowing our mojo.
Yeah, well, remember that, Todd, I lived in Washington, D.C. for 25 years. Knew a lot of people in the government. I interviewed a lot of people from Fox News in the government. And the number one rule of the government in the election year is that the Fed doesn't raise rates. The number one rule is that they increase some of their overnight lending. They juice the economy. Why? Because freaking whoever it was, Janet Yellen or going back to the bespectacled bald man, Alan Greenspan, they get in the car. The car comes and picks them up. It takes them down to the Fed. They get him in that long room with the 24 seats for the governors, et cetera. And he looks the guy in the eye and he says, what the hell are you doing? It's a freaking election year. Now cut those goddamn rates and get it done now or find yourself another job. I mean, I'm not over emphasizing that it's the nature of the beast. So for somebody to be shocked that maybe they're going to cut 50 basis points in May, which would be my call. Come on, man. Well, how naive can you possibly be? Can you get out of the bed in the morning? I mean, can you drive a car?
50 bips, a 50 bip cut in May
Yes.
That's the first time I've heard you say that on buy, hold, sell, Toby. I like it. I like that type of.
Well, it's just a fact that
prognostication.
you have to look at what's known as the actual rate of interest rate, which is the interest rate plus inflation. So that's called the natural rate. And there's a point of which in these, as deflation is coming down, you would bring interest rates down simply to stay within that normal natural rate. Because there is a point where, like we got in 2000, the natural rate was nothing. It was zero. Money was less than free. You'd lose money buying a bond. So guess what? Stocks went crazy after we figured out we weren't all going to die.
Yeah. No, I like it. I like it. In show business, we call that a promo reel.
Exactly. So I'm just saying, what we haven't talked about, which I guess we'll do on next show, is the fact that discretionary is now up 7%, industrial 6%, materials 5%, and all of tech is only up 3%. So we have broadened out this market, and we've added new positions other than in our poor people's beneficiaries, and that's healthy. What's not healthy was opening up the paper and seeing the BRICS story or then seeing the Magnificent Seven, blah blah blah. We have the Magnificent Four, and Apple ain't in it. And exactly. I have a very close friend, and when she inherited $40,000, I had just gone and interviewed Steve Jobs, and I told her, listen, you got to put some of that money in Apple. Well, she put it all in. She hasn't touched it for 25 years. That's worth about $4.5 million.
It's time for her to give some of that to charity and pay a little taxes.
I said, give it to your kids, give some money to your kids, do some taxes, do some charities, etc. Because until they get an AI strategy that's actually compelling, then look what's happened to Google. They changed the name of their AI 3 times.
Got to keep changing it. But Tobin, there's people saying, look, Apple looked good at 195 and it's now 160. I got to buy more. And if you look at if you look at everything about it, and again, I'm not saying it's not a great company. What are you showing me, a Samsung?
No, I'm showing you my Apple that they were giving away at Verizon.
Right.
We got 3 new 15 Pro phones, 3 new iPads Pros for quote unquote free. You're working in your
right.
That's how they're getting their volume. The biggest volume at Apple has been the Verizon promotion, which they just started again.
Yeah.
So, and Todd, let me kind of broaden this thing out to say the following, right? That sports has never been bigger, right? Movies have never been, maybe movies, maybe not so much, but sports has never been bigger. But Joe Namath, I have a nice poster, a little thing. Joe Namath doesn't play anymore. Willie Mays doesn't play anymore. You can't be in names from the past, and as each cycle comes on, new names show up, and people will say I feel more comfortable in Colgate-Palmolive. I know that name. And look, I can remember, Tobin, when I was actually in retail, and a client would say to me, well, does this trade on the New York Exchange? Because I don't want to buy anything on NASDAQ. I don't want to buy anything over there because I don't trust that.
That's a crapshoot.
New names will show up, and you're comfortable with a mathematical model that not says, someone told me, but the revenues, the margins, the cash flow, all of those things is what dominates all of my picks. And a lot of those names are names that not everybody knows yet, but I think that they will.
Well, that's good.
Well, you know what? They know Joe Namath, and Toby actually interviewed Joe Namath back in the day at the Fox Business Network.
Oh, that was fun. We'll go into that later. We're way over time, but it was interesting because when I was in college, we 5 of us rented a house down in Long Beach, and when Joe Willie got traded, he lived in the house next door to us with Dennis Hara, Jack, not Armstrong, Jack. Anyway, Dennis Hara, all those guys. So he forgot. I'm shocked that he forgot me. But when I was telling him a story about one of the big parties that we held, and Joe, I have never seen a more attractive human being than Joe Namath to people to females with more than 2 cocktails, and it was pretty funny. So
the food was cool. The food was cool.
Yeah.
Some great stories there, that's for sure. So listen, gentlemen, we're going to leave it there today because everybody is going to be focused on that PCE number. We will have breaking news coming out of buy, hold, sell. Check all of our social media accounts. We'll also provide some analysis on that as well. And of course, if you want further analysis and a real deep dive into the subject, check out what Toby has to say over at Transformative Research, and obviously check out what Jordan Kimmel has to say over at ValuEngine Capital. So, Jordan, I got to thank you so much for joining us today.
Look forward to seeing you soon again.
You always bring the A game for the audience, that's for sure.
Look forward to seeing you soon.
Just don't ask me about the damn inflation numbers, okay? Next time.
See you guys
Absolutely. So coming up next week, we actually have Jay Hatfield from ICAP's going to be joining us. Timothy Kramer, he is the CEO of CNIC Funds. He is going to be joining us as well on Buy, Hold, Sell. A lot of great guests, and we're just so happy to have everyone, and also with all of you to join us as well.
And you'll love Jay Hatfield. I've known him for a long, long time. We were the first company to go into one of his funds called AMSA, which crashed. It was an MLP. It crashed in 2020. I just got an email from somebody who said, do you realize that on the $2 of the income I'm making dividends, and the fact we bought it for $6 or $8, and now it's $39, then I could never sell this thing. And I said, well, I'll tell Jay and, send him a thank you note, okay?
Well, there you go. Well, Jay's going to bring it. I know that. He's really excited. And plus, it's on the eve of the jobs report. And he has a lot to say about that jobs report. So it's going to be fantastic. Definitely going to be must-see TV for everyone. So on behalf of Jordan Kimmel and Tobin Smith, I am Todd Schoenberger. Thank you once again for joining us today on Buy, Hold, Sell. We'll catch you next time. Take care.
Buy, Hold, Sell, brought to you by CrossCheck Management.